not too far into the future, we're going to see, the tail of the Titanic tip up into the air. And I'll put it this way, the people who are still in fiat at that time, when this thing goes down, the people who are still in fiat are going to be like those people splashing around in the water after the Titanic goes down. What I'm trying to do is get as many people, as many investors, as many of my subscribers and viewers as possible into the lifeboats
Hmm.
before, because this thing's going to go down. It's going to take a lot of people with it.
Monaco 64, home of alternative economics and contrarian views. Well, I've got Clive Maund back on. We spoke about 3 weeks ago, and Clive is a technical analyst. And I remember back in 2011, he called the silver crash, and we talked about that 3 weeks ago. But he said at the time that he was mega bullish silver. And it's interesting that today, Clive, as we speak, silver just traded above $45 in the spot price. I personally don't see too much resistance until 48. But anyway, welcome back.
Thank you, Mario. Glad to be back.
So, what have you got for us? Are you now bearish or is it early days? Have we got to
Um,
sit on our profits? And I guess it depends if you're a trader or if you are
exactly.
paying physical silver or you're doing the miners, right?
Well, I think there's 2 points to make regarding that. One is that yes, the market is the precious metal sector is massively overbought the stocks, right? There's no doubt about it, which is why we're going to look at the charts for the XA, the HUI index and the GDX to start with. But it is massively overbought. But on the other hand, we're in a unique, unprecedented situation where what we're seeing is a melt up, which I believe is still in its early stages,
I,
despite it, despite this massive overbought condition. So it's
yeah.
rather a case, and this was a thing I got a little bit too cautious about a week ago, and I started thinking, that we might see a significant reaction. But I'm rather of the opinion now that yes, while we could see, a bit of a shakeout or a reaction or a consolidation, the overall theme of this sector is that it's going up and it's going up vertically, pretty
Yeah.
much, with the occasional pause to unwind the overbought condition.
Interesting you use the word melt up because I've been of the opinion that one day we'd have a melt up or what the Austrians call crack up boom or flight to real assets. I think in German is Flucht nach Waarwert. I forgot. Von Mises talks about it. But anyway, and of course, silver and gold are monetary metals. But do you want to start with the HUY chart?
Um,
Or
yes, I think the HUI chart would be a good one to start with.
let me bring it up. So here we go.
Ah, right, okay, yes. Now, this is a very interesting chart because uh, one of the important points to observe here is that we've already had clear breakouts in GDX, which is the Market Vectors Gold Miners ETF, which you can see at the top of this chart. And we've already had a clear breakout by the XAU index, which is, of course, a measure of the large gold and silver stocks. And as we know, they've performed exceedingly well over the past few months. But we do not yet have a completed breakout by the HUI. And that's really the reason I'm showing this, because it's the last one to fall into line, to follow suit, if you like. And because it's arrived at that 2011 high, we could see a pause here. But I believe that there's probably going to be an attack on Iran by the US and Israel, probably in October, or, for the next 6 weeks, maybe 2 months or so. And if that happens, all hell could break loose and this thing is going to go up even more. And I think, yes, we could see some consolidation here because it's overbought, because the HUI is at the 2011 highs. But on the other hand, the overall situation is so is so extraordinary and so serious that I think the sector's just going to carry on higher. And there's another chart on this chart, which is the one just below the chart for the HUI itself. If we,
Clive, you said you wanted to look at HUI index over gold. This one here, right?
yes, yes. Because the point I want to make with this, Mario, is that even though we've seen this really big rise in precious metal stocks over the past few months, look at this HUI over gold. Uh, Look at how the HUI index has performed relative to gold during that period. It's still incredibly, it's still not that far off its lows, which means that there's huge upside for the sector, absolutely huge upside for the sector.
Yeah,
Because
I mean,
because because
sorry.
as we know, once the speculative interest arise, um, then stocks are preferred over gold. When there's more interest in stocks than gold, once people speculative players arrive. So we're going to what this chart, that HUI over gold chart implies is that this bull market in stocks remarkably is still in its early stages, despite the rise up to now.
Yeah, and I'm not surprised, Clive, because the miners have been in the doldrums for so long,
Yes.
and gold has actually done quite well since 2000, late 2015. There's another chart, well, this is not a chart, but you sent something, magazine cover.
Yes, this is from 1982, which is right.
Uh,
It's
Yeah,
the reason I've included this is because when I was learning this subject in London in the 1980s, when I was working in the city, technical analysis, it was the attitude towards it was Neanderthal. In other words, it was regarded as hocus pocus, and that's actually incredibly. Uh, that's a cover from the Investors magazine in 1982, basically saying that chartists or technical analysts are engaging in voodoo.
yeah,
It was pitiful. In fact, I got my education from books that I ordered specially from the United States, like a book, Technical Analysis of Stock Trends by Edwards and McGee, which is the Bible of technical analysis, and also a very good book by Joseph Granville. I don't know if you remember him, but he was a very adroit speculator in the old days, but unfortunately for old Joe, it all went to his head, and when he got old, and he kind of went off the rails a bit because he became resolutely too bearish, not taking into full account of how the Fed was just printing money to keep the game going. So many of his technical indicators were saying that there was going to be a crash and the market was going to drop a lot, and it didn't because of Fed intervention, basically. And this is, of course, exactly the situation we've seen in recent years of umpteen people calling for a market crash, and it never happens because every time it looks like it's going to happen, the Fed steps in to protect the super wealthy who own the vast majority of stocks.
yeah, and it's interesting that it says here sterling on on the skids, time to sell. And I think that was near the low for I think the pound reached 105 in the early 80s. So it was the exact wrong time to sell sterling as well. Uh,
Yeah,
uh,
yeah.
but yeah, this is interesting. I remember Clive. I started in the markets in the late 80s, but I only started looking at technical analysis when I joined GNI, which was a commodities futures and options broker in 1993. And
Oh,
I remember my colleagues, they were looking at support resistance. The guy I worked with, he used to write up all the supports and resistances for the government bond futures every day. And I started doing it. And then someone came to me and talked about Fibonacci. And I was like, who is this Fibonacci? But then I started taking courses in technical analysis as well, and I don't think it's voodoo, and I also like fundamentals, and I think if you don't know both, you might miss The fact
Hmm.
that we are kind of in a melt up, it's a monetary phenomenon. And that's why I agree with you. A lot of people are going to be, yeah, they're
Well,
all calling
I'll tell
for,
you,
excuse me, they're all calling for the top now in gold and silver in the miners. And I think they're going to be
yeah.
proven wrong.
Oh, yeah, exactly. And I'll just tell you something about this Fibonacci. You got me thinking. I
Hmm.
went to a talk in the 1980s in London by a guy called Robert Prechter Jr., who was like an expert on Elliott wave analysis. And he predicted everything that we're seeing happen now, he predicted. He was a bit, you could say he was too early, but the reason he was too early, because you can say, is because of the monumental money creation and debt creation that we've seen since, which has basically been to kick the can down the road as much as they possibly can, extend the whole thing, extend and pretend. They've extended the whole thing to its ultimate limits. It's like stretching an elastic band. You just keep stretching it and stretching it and stretching it until it just goes snaps. And that's the point we're at now, which is why gold, silver, and precious metal stocks are really taking off. And when this thing snaps, Mike Maloney said this. He said silver's going up to between 200 and 2,000 an ounce. And I agree with that. And he said 200 is a conservative estimate. And, we're looking at still looking at it in the 40s. So silver's an incredible bargain here. We'll look at its chart when we close, actually, because that is my favorite chart, to be honest.
And Robert Prechter, yeah, I followed him years ago and I subscribed to his service. And one thing that I think he got wrong as well is that he looks, like you said, at the markets in terms of confetti, which is what the dollar has become. And he was always really bearish gold when it was at 400, or
Hmm.
he said it was going to drop. So, but I think he said the markets were going to like a bear market in 2000. And I think if he had looked at the markets, the Dow and S&P in terms of gold, he would have been right.
Hmm.
Because back in 1929, the markets were priced in gold, not in paper. And there are others as well who have been calling for a big crash, not just in the stock market, but in gold, and they've been proven wrong. You've got a chart here of the GDX. Do you want to look at that too? This one
Oh
of
yes,
the
yes. The reason I want to
introductory
look, yes,
introductory
the
charts.
reason for bringing that up, Mary, is because in relation to the HUI chart, is because this is the reason why I was getting a little bit sweaty palmed, you could say, in the recent past, because it is so overbought. If you take a look at the MACD indicator at the bottom of the chart,
Yeah, yeah. Oh, yeah.
it's record overbought by a country mile. It's just incredibly overbought, but that doesn't mean it's coming down. It will probably what we could see is it's like when an aircraft hits air pockets. I don't think it's coming down. I think it might zigzag around a bit, but basically, I think this melt up continues, and we're going to see pauses along the way. Like little flags and pennants and consolidations, maybe a sharp reaction here and there just to freak everybody out. But basically, this thing's it's going up and it's staying up and it's going much higher. And the other point on this chart is I put silver on towards the bottom of this chart again, and you can see a magnificent bowl pattern that's formed in silver since since 2000, as far back as the highs of 2011. And this bowl is projecting a huge breakout by silver above a resistance of $50. And and interesting, the bowl pattern itself, the actual price track above the bowl pattern is comprised of a cup and handle. You could call it a base or a consolidation pattern.
Yeah.
But both of them are projecting a breakout above $50 quite soon, leading to a massive rise.
Yeah, it's almost like you and I are back in 1922, 23 in Germany, looking at technicals,
Oh,
not
oh,
realizing that it didn't really matter anymore if it was overbought because
yeah,
these metals
yeah.
have been, well, especially silver, suppressed for decades. And when the top blows, and to me, 50 is the line in the sand, look out above.
Well, again, as I've learned from Mike Maloney some weeks back, watching one of his talks, one of his videos, The short position in silver is massive, unprecedented, which is, of course, if this thing breaks through $50, we could see a tremendous short covering panic.
I've
Which,
heard from people as well that that the short position by the bullion banks is actually on behalf of the central banks, and
Hmm.
that yeah,
Well, I think that what they're doing, and I think that what they're doing is they're basically soaking up as much of it as they can at low prices ahead of a thing blowing to the upside. Because central banks have been net buyers of gold, I think, since 2008 or so. They've been doing heavy buying in the last few years, and of course, if they're buying gold, and we can reasonably presume that they're probably buying silver as well. And they're using this shorting activity to keep a lid on it while they do complete their accumulation patterns.
so before we proceed further with the interview, I just want to give a shout out to Dirty Man Safe. So, with traditional safes, their so-called advantage is that criminals can't break into them. But Dirty Man Safe is different. Its advantage is that it's undetectable, so they can't even try to break into it. And that's only one of the many features of Dirty Man Safe. They provide three different sizes, and you can bury your gold coins, silver coins, bars, important documents, jewelry, and anything that's valuable for you. So yeah, Dirty Man Safe is affordable, convenient, provides you peace of mind, confidentiality, and sustainability. So if you want to find out more, there's a link below in the description. It will take you to a landing page. And if you use that link, you get 10% off if you were to decide to buy a Dirty Man Safe. And they ship it to Europe as well, not just the United States. And just to let the viewers know, Clive has a really good service, clivemaund.com. If you want to look at it, I'm going to put a link below in the description. And yes, Clive has provided me with a free subscription. That's what I've gotten from this. I'm not getting paid or anything, and I just like speaking with Clive about markets. But anyway, Clive, where do you want to go into now? Because
I
quite a
think,
bit of a few charts here.
yeah, what we could do, Mario, also with respect to viewers' time, is quickly go through these before and after stock purchase and sell, buy and sell examples that I said. Yeah.
Yeah. So I've got here, let's see, Royal Gold. Do you want to go through that?
Yeah, I think they're numbered, aren't they? So you just start with the earliest number.
Yeah, they weren't in order. So
Oh,
yeah, I mean, I've got two for Royal Gold, one short-term
that,
chart and one long-term chart.
yeah, they should be paired so that you have a before
Yeah.
and after.
Let's have a look. Let me just start here with this one. Uh, yeah, I've got this one, Royal Gold.
Yeah, they don't have to be in order, man. It's not
Yeah.
important. It's just right. Yeah, Royal Gold. What happened is this was a classic situation. Back in the summer, Royal Gold dipped back to its rising 200-day moving average, which was a classic buy spot. So I put out a buy on it, and then that's what happened afterwards. It went up 22%, as you can see, which is not all that great, but it's a significant amount for that stock in a short space of time. Next.
Yeah, we've got this one here. Hold on, let me get rid of that. And Royal Gold, there you go.
That was the chart from the time we bought it.
Yeah, so this is more long term.
And one of the good things for viewers is they can of course double back through the video or pause it or whatever to take a closer look at it, so we don't have to stay on it too long
Yeah,
because they can take their time, go over it again or
yeah,
rewind it, whatever, put it on pause. Yeah, that was really a classic of a stock in a steady uptrend, reacting back to its rising 200-day moving average where it was a buy. And you can also see that it was heavily oversold on its MACD, which was another reason for putting out a buy on it.
okay. And there's one here, which TRX, which was Jim Sinclair's company, Tanzania
Yes.
Royalty, which I remember when it was trading at $7. I
Yeah.
used to
Oh,
have
yeah.
that stock.
Well, I
So
took
is
some
it this
flack.
one or which one do you want to look at
Yeah,
first?
TRX. Yeah, look at this one first,
This
Barry.
one, yeah,
Yeah,
yeah.
I took some flack over recommending TRX from grumpy old investors who'd never made any money out of it, and I think had bought it at much higher levels. So, but I could see this bubble pattern forming in TRX at a time when the sector was poised to take a one was this early August. So I put this buyout on it, saying it was ready to go up, and of course, take a look and see what happened in the next chart.
Let me just
That
get
yeah,
it.
you had
Another
yeah,
one?
you
Oh, yeah.
that's
There we
it.
go.
That's it.
Yeah.
Yeah, yeah. It's up 65% in less than 2 months. So that's
So
another
are
great, very good.
you still bullish?
Oh, very
Sorry.
bullish on it. Very, you know, even if it reacts back a bit, well, just add to positions or buy if you haven't
Yeah.
got it already. I'm very bullish on it. Yeah, and
Because
I think interesting thing about old Jim Sinclair, I used to talk to him sometimes, and he developed this butt reef mine in Tanzania, which is of course why it got the name Tanzanian royalty in the first place. And he really believed in this mine and spent years and years developing it. And I think now it's coming of age where I'm not sure where it is in relation to coming in production at the moment, but the timing really couldn't be better because, yeah, the sad thing is that old Jim never lived to see it because I think he died a couple of years ago.
yeah, and I think you got a little bit of flack because like me, I mean, I was waiting and waiting and
Yeah,
I
it seems
thought
to take forever.
yeah, yeah, that's right. And you kind of wonder, will it ever
Get
do
moving.
anything?
Yeah, yeah,
We
exactly.
got another one here with the weird, funny name,
Ah,
Honey Badger Silver.
oh yeah, yeah,
Which
yeah.
one do you want to look at? This one for
That one. That's where we bought it. That's right. The other one, Mary. Yeah,
the other
that's because
one?
that's the
Yeah,
after chart.
Honey
Yeah,
Badger. Okay.
yeah. Well, we bought it there at I think it was 16 cents. That's right.
Yeah.
Back in
And it was
when it was back in
27th of July.
back in July. That's right. And at that time, it really had a very favourable accumulation line. You can see that at the top of the chart. And upside volume was building,
Yeah.
and the momentum was climbing, but not overbought. So I thought, this is going higher. And if we look at the subsequent chart, we can see that is just what it did. And I think I said a few days ago that it looked to me it's going to break out upside from this flag. Although,
Yeah.
the market a bit jittery, I think it's been hanging around a bit, but I still think it's going to accelerate, especially because this is a silver stock, of course.
Yeah.
The silver breaks above $50. This is among the stocks that is going to do a moonshot.
That looks interesting. I never heard of it. Honey Badger Silver. Hecla I've heard of. So let's have a look at that.
There we are. That's the chart from when it was recommended at the end of August. And now
Yeah.
this is interesting because if you look at this chart, for the technical people, will appreciate this. The people who are into charting, who are watching the video, that pattern that formed in August, I decided it was what's called a running flag. Partly from the accumulation, partly from the volume and the general look of the sector and that very high volume breakout early in August with a huge gap. You see that?
Oh,
We can
here.
see
Yeah. Yeah.
that's right. If you have a breakout from above resistance with a huge gap like that on a big gap like that on huge volume, it's very bullish. So I concluded that this was a running flag. So if we look at the next, what happened to it, well, it took off higher.
Wow. Yeah.
Yeah. So that was up 27% in less than a month. So that's another good one.
Yeah. I think it's one of the oldest miners listed on the
Oh yeah, yes, that's
stock
right. Yes,
exchange,
yeah, it's up in
Hecla.
I think it's up in Idaho.
Yeah. We've got now uh,
This
Clean
was
Tech
a
Vanadium Mining Corp.
yes, this is a rare earth minerals stock. And
Oh, rare.
the reason I lighted on this one only a few weeks ago was that it was completing a large base pattern, but I saw that there was very heavy buying going on, very heavy buying, even though the accumulation line wasn't rising much. And I thought this thing's building up to something. I did wonder if it would make a symmetrical right shoulder, which would drag on a few weeks more, which is why I put that question mark, I suppose. But I concluded overall that that the volume pattern especially was exceedingly bullish. So let's see what happened to it on the.
Yeah. Oh, my goodness. And I just want to say something to the viewers. Uh, Clive, this is not financial advice, right? This is just what
No,
I think, and you
it's just
can act upon it. And, yeah,
yeah, it's just entertainment, shall we say?
yeah. Anyway, this is quite a big move.
Well,
That's
yeah,
four bagger. And
it
are these
tripled.
stocks quite liquid to trade?
Yeah, I think this one is now. I think in the
Yeah,
past it's been fairly liquid, but you can see that volume building up in the past few
yeah,
months, so it's reasonably liquid. Yeah,
yeah. All right. So what do we got next here? Hold on.
that was up 200% in 12 days, so that's pretty good.
That's pretty good. Did you buy a nice car with it?
No,
Or
I'll let you.
you told me the story about one of your subscribers.
Oh, yeah, that's right. And the silver crash in 2011. I went to visit him actually in California in
Yeah,
Salinas. A guy
yeah.
called Tony. He was very pleased because he shorted silver big time before that crash call in September 2011, and he bought his wife. I think it was a new Dodge Charger or something like that.
Okay.
For
Well,
the
we got
profits he made over.
we got Coeur Mining, which was used to be called Coeur d'Alene, wasn't it?
Yeah, that's right. It
They're in
did. Yeah.
Idaho as well, and this looks a little quite a lot like the Hecla situation.
Exactly. It is. It's the same
Yeah,
thing. That's why I put on there possible running flag,
yeah,
and that was at when was that? End of all. Oh, it's at the same time as the Heckler wreck, which
yeah,
is why it performed similarly. If we look at the
yeah. Let
next
me
chart,
move. Yeah.
because we don't need to stay on these too long because
Oh yeah, look at that.
viewers could
So
take
it
all the
went up
time.
50% or 41% in the month.
Yeah, in less than a month. Yeah, from that
Yeah,
wreck.
yeah.
Yeah. So all in all, my subscribers are quite pleased at the moment.
We got
Oh,
magma.
this one was just amazing. Just amazing. I picked up on that huge volume and that cup and handle base there. Beautiful
Yeah.
little cup and handle base, which is best shown on a 2 month chart. You see that? And the interesting thing is for the technicians watching this, look at how when the price declined in August into the lows, the volume built up to become climactic. That's what's known as a capitulation. Basically, what happened is all of the nervous Nellies, if you like, got flushed out in that decline. And then smart money, seeing that it was undervalued and knowing that the silver price was going up, they were piling in from late August through September, mid-September. And I thought, and I watched the accumulation line you see at the top as well rising. And I thought, this thing's going up big time. Look what happened in in the following chart.
Wow. Yeah. Another.
We absolutely nailed it because we bought it the first at the open that day, and it rose immediately. Well, it doubled at the peak there, and it's just looks to me like it's consolidating the small flag now.
Let's see. And
It
now
could react back a bit, but
let's look at
oh,
First Majestic.
yeah, whatever one
Uh,
next.
oh, let's start here. Yeah.
Yeah, I spotted a diamond pattern forming. They're rare, those diamond patterns.
Mm,
I spotted this diamond pattern forming in First Majestic. I've only seen them on a few occasions actually, and I thought this thing's ready to break to the upside. And of course, it concurred with everything else I was seeing. And if we look what happened to that,
yeah.
same story, pretty
Yeah.
much.
And First Majestic has been ever since 2021. It's been kind of a dog, hasn't it? And
Yeah,
I mean,
yeah,
there's still a lot of room on the upside, I think.
yeah, exactly.
Yeah. Um, but what about we've got here Freeport you want to talk about?
Freeport. No, this is where are we done with the stock charts now,
Yeah,
Mario? Because
I'm through. I've got HUY though as well.
okay, no. All right, let's go on to Freeport then. I think
Yeah.
because um, uh, there was some very big news out of Freeport a day or two ago, which is actually quite tragic news because what happened was a gigantic, I think it was, I don't know, several 100,000 tons of mud came sliding down the mountain and went straight into the mine and filled it up, basically filled it up with mud.
Mm.
So mud and rocks. And of
They're a
course,
copper miner, yes,
yeah,
mostly.
I don't know. I can't remember where it's situated. I think it's in Indonesia or something like that. I'm
Yeah,
not sure. But it's called the Grasberg mine. And in any event, it was a big copper mine which produced quite a substantial quantity of copper. And basically, they've declared force majeure. The mine is, it's kaput. It's a bit like Victoria Gold, that terrible Victoria Gold story about a year ago, where you had a massive slump of a tailings that basically wiped the mine out. Um, what's happened is it's put Grasberg out of production. And the amazing thing is, some workers got killed, of course, the miners got killed when all this mud flowed into the mine. But the interesting thing, just from a purely technical point of view, is that, well, I wouldn't buy Freeport here anyway, not after an accident like that, because at the very best, it will need time for sentiment to recover before the stock can rise again. So it's to be avoided for now, and it could drift lower, of course. But if we look at what the interesting thing about this, Mario, is if the effect on copper, because of the Grasberg mine being taken out of production, and because of the looming or commencing copper supply deficit. If we look at the chart for copper now, which is should find next to it, I recommended copper, but the copper will probably mark out a base here and then advance anew because of the looming supply deficit, which of course has been exacerbated by the Freeport debacle, and it broke out yesterday anyway to start a new uptrend.
yeah, this looks quite bullish, doesn't it?
Yeah.
Last time we spoke, you said you're mega bullish silver, and silver has reacted. I mean, as we speak here today, silver is at 44.50. The high is 45.09. I was looking at some charts, Clive, that the last resistance really I had before we tested 48, which was like a key level in 2011, was 44.20. So
Mm.
it seems very, very bullish to me. And gold as well has been a bit choppy, but I think, would you say gold has been a bit choppy the last few days because there's an option expiry on COMEX today, and I think the market makers are
Mm.
always
Well,
trying to.
yeah. I think that could influence it. I think that it's very important, though, Mary, about especially the future outlook for gold and silver, that we keep the big picture in mind. And do you remember at the end of the Terminator movie when Sarah Connor drove south of the border into Mexico at the end of the movie, and she's in a gas station, and there's an old guy there, and he says to her, "There's a storm coming," and she looks back at him and she says, "I know." Well, that's the situation we're in now with regard to the world economy, the dollar, the world markets, wars, all the rest of it. It's really um, a perfect storm. And so what my service seeks to do is to get us, think also for what happened to the Titanic, how it sank, right? What we're seeing now is a bankrupt economic system that is sinking like the Titanic. The nose is tipping into the water, but we are now at the stage where, or not too far into the future, we're going to see, the tail of the Titanic tip up into the air. And I'll put it this way: the people who are still in fiat at that time, when this thing goes down, the people who are still in fiat are going to be like those people splashing around in the water after the Titanic goes down. What I'm trying to do is get as many people, as many investors, as many of my subscribers and viewers as possible into the lifeboats
Hmm.
before, because this thing's going to go down and it's going to take a lot of people with it. And I'm trying to get as many people into the lifeboats. There's still space on the lifeboats. If you recall in the Titanic film, the lifeboats weren't even full.
And there
And
weren't enough. They didn't have all the lifeboats either. There's
no,
a
no.
shortage.
Well, I
Uh,
think it had half capacity because they never
yeah.
thought it would sink.
and
That was
and
one thing.
I
And
guess
then
the lifeboats is physical gold, silver, the miners,
exactly,
and
exactly.
the playing the tech stocks and crypto is you instead of jumping out off the ship, you go to
Davy
the
Jones.
ballroom and dance and drink champagne.
Davy Jones, and I've heard that there's a plan. Basically, what they're trying to do is corral the normal investing public into cryptos, and then they're going to pull the plug on the whole thing. They're using it to seduce people into cryptos, partly as a means of easing them into CBDCs, and eventually they're going to pull the plug on the whole thing. Cryptos, they're going to devalue cryptos massively and revalue gold
I'm not
because what's happened,
surprised.
which is
Let me
why.
let me tell you one thing though. I know the Trump brothers are pushing crypto a lot,
Hmm.
but did you know that Donald Trump Jr. He's an affiliate. He's working with a gold bullion company. I forgot the name now because one of my viewers sends me the stuff that he writes. So at the same time, they're telling young people, everyone, to buy crypto. They seem to be buying gold on the quiet.
Yeah, yeah. Well, I think what they're going to do is they're going to pull the plug on crypto. They're going to revalue, rather like it's very interesting. You remember the story of, I think it was Franklin D. Roosevelt, 1933.
Yeah,
Basically, the government, with the complicity of the people who were dumb enough to give into it, if you like, they stole their gold. They basically stole it. They said,
yeah,
you got a few weeks or something to hand in
yeah,
all your gold, or you go to jail for 6 years or whatever it is, or 10
yeah.
years, and there's a huge fine.
Executive
Uh,
Order 6102. Yeah, they say, oh, we didn't really steal it because we gave them Federal Reserve notes for it. But like you said, there's a $10,000 fine or imprisonment. I mean, that's quite coercive, isn't it?
Well, to put it mildly, what gets me is that after they got all that gold in, they revalued it about a year later
Yeah,
by
to
50%. All of a
well,
sudden, the government's gold coffers became 50% more valuable. And I think what they're doing now, these central banks, is they're buying gold hand over fist. They're sucking the public into cryptos. They're going to pull the plug on cryptos and revalue gold. And that is, if you like, that's my argument for getting my people and anyone who's interested into gold, silver, and gold, precious metal stocks.
yeah, it was great speaking with you again, Clive. And so melt up coming. Hold on to your hats, I guess.
Yeah. So a final message to viewers is that don't allow yourself to be freaked out by, sudden violent drops or consolidation patterns. Or I don't think it will drop much, this sector. But if we do, any drops should be taken as buying opportunities, basically, because I think we're in a long-term melt-up situation that could carry on for, say, as long as 2 years or so, or even more.
Yeah, I want to show you a chart which I've been following for years. And if you actually look at it, it looks a lot like the gold chart since the year 1998.
Yeah,
And
yeah,
this is like the breakout that we've had at 2000.
yeah.
And we're kind of around here or maybe here. Look,
Oh, exactly.
I mean, it looks like the same.
Well, because if it's actually very much worth including this chart because then viewers will appreciate this because you might say, oh well, gold's gone up a lot already, but what happens if the Fed money creation is going exponential, the dollar is going to collapse, right? The only reason it's not collapsing at the moment is because every other currency is
Yeah.
collapsing, which is why gold's going up against all currencies. But as this process of money creation, not just in the US, but everywhere, accelerates, money becomes increasingly worthless. And so gold in all these currencies will continue to accelerate to the upside, eventually going vertical.
Yeah, and I just saw today these economic numbers. GDP in the US was revised to almost 4%, like 3.8.
Hmm.
And despite that, they're cutting rates, and the budget deficit to GDP is like 7%. It's
Hmm.
crazy that
Well, I
they
think
think
the
it's
important thing to bear in mind as well is that a lot of these economic data is fiddled. And I think, I think, John Williams' shadow stats. I think he shows what the real data is before it's been meddled with.
Yeah, I agree.
But
Okay. Yeah. Yeah, Shadow Stats is good. Anyway, Clive, thank you for your time, and we'll keep in touch and talk again soon.
okay. Right. Okay. Thanks very much, Mario. And if viewers are interested in making big money in the sector, simply subscribe, as we have done the last few months. Simply come along and subscribe to CliveMaund.com. You'll be very welcome. We'd be pleased to have you on board.